if your money is just in cash, somehow, no, just by virtue of the massive amounts of printing that's going on, whatever's sitting on your bank account will just keep losing and losing and losing and losing and losing value. Hey guys, so in this video, I wanna answer a question that was sent out via Instagram. I know I haven't done this for quite some time, no, but I'm trying my best also to answer the questions that you guys have sent out. So for this video, I wanna answer a question that was sent by Alan Mogul. He's a street photographer. So, hi Sir Marvin, hope you're doing great today. Your videos are highly educational and amazing. Thank you so much. Can I ask you something? How much percentage of my total assets should I retain in cash / liquid assets? What percentage can you suggest? Thanks again. More power to you. God bless you and be safe. He actually added more because I actually replied to his message, no, and he said this: I'm in my 40s and just looking at stocks, MP2, ETF right now. Reading books and watching your videos help a lot. Have you checked out my book, Stock Smarts? If you want to learn more about stocks, check it out in the link below. Also, please factor in your video that we're currently paying for our condos amortization. So let's first differentiate which assets are liquid. Meaning, when we say something is liquid, it's the ability to be able to convert it into something that's relatively cash-like already. Meaning, cash na siya, you can spend it, you can use it for a lot of things. So, to make it super simple also, if you invest or put money in a business or a friend's business or a franchise, automatic that's not as liquid because you have to find someone who's willing to buy that business from you if you want to liquidate, or if you're investing in a friend's business and then the business is new and then the money that put in into the business they used also for expansion or buying equipment, etc. Ultimately, no, unless your friend has a lot of money and can buy you out also, it's not also as liquid. In the same way, the real estate market is not as liquid, especially given the conditions where we are right now. But generally speaking, regardless if there was a pandemic or no pandemic at all, real estate in general is something that's not as liquid as other asset classes as well. In the same way, that's how Rolexes are, art, even whiskey, for those who look at it as an investment. So those types of investment aren't as liquid as other investments that are out there. In the same way, what are liquid investments? Investments that are easily swapped into cash. One way to actually look at it is automatic. Your savings accounts, they're very, very liquid. Please do remember this: when you terminate your time deposit, the capital that you placed in, it's still generally intact. You still get your full amount. It's the portion of what you earn that will be taken out. You won't be able to benefit from the earnings if you take it prematurely. In the same way, the cryptocurrency market is super liquid. There's so much volume in it. It's a worldwide market. It's super liquid, and there's a lot of off-ramps now that you get to convert it back to fiat and cash as well. In the same way, stocks are generally liquid. In the same way, also, the forex market is generally liquid as well. So a lot of those paper assets that are traded via digital exchanges are generally liquid. Regardless if it's ETFs or even mutual funds, there will be a risk though that even if you can swap your money into something that's cash-like already, if the market is down, if you bought at a higher price, then there's a chance that you may get a loss. It doesn't mean that it's liquid, it means that it's guaranteed. It doesn't mean that it's liquid, it means that you're actually safe, that your investments won't get hit. It doesn't mean that it's liquid also that you won't experience volatility, you won't experience loss. Liquidity does not mean your money is safe. Liquidity just means that if you want to convert it back as dollar or peso, you get to do it at a very, very fast rate. Please do note that MP2 is safe. However, please remember this, that your money is locked in for 5 years, but they have some special clauses if you would want to terminate it. But I think that requires also some processing, and it's not as straightforward and it's not as fast as, for example, your money is in a stock account or in a cryptocurrency account, that it takes a few seconds for you to be able to swap it back into cash. That's the main difference. So to answer the question, what percentage should be placed, here's what's interesting. There's really no hard and fast rule about it. You can check every iteration from what other financial planners are saying, and you can check what other entrepreneurs and business people are doing, what investors are actually doing. There's really no hard and fast rule, and it will be highly also dependent on what your source of income is. In my opinion, if you think your source of income is something that's fixed, you can somehow predict what you could actually get on a regular basis, maybe the reliance on the amount of cash that's stored may not be as important, because you know that you have a lot of money that's coming in on a regular basis. You know also that since you have a safe and secure job, then generally speaking, maybe you have benefits also that can protect you, and you know that your job is generally safe, that you won't be taken out from your job, then you don't have to stockpile a large amount of cash. Please do note that employment gives you that buffer, that it's predictable. You know that if this is your salary in January, you will still get almost the same amount in August or November or January, provided that your job is secure. So if your job is secure, put an amount that you're already comfortable with, that okay, this will be my emergency fund, this will be an amount of money that if something happens to me, I get sick, I lose my job, this is an amount that's comfortable. And when I say comfortable, for some people it's a year, for some people it's 2 years, for some people it's 3 months, for some people it's 6 months. There's really no hard and fast rule, but it will be based on what you're comfortable on. Now that being said, if you are a person who's a entrepreneur, you're a freelancer, you're a investor, or you're a trader, especially if you're a trader, that you're getting it not from dividends, you're getting it from capital appreciation, then in my opinion, you need to have a larger stockpile of cash that's on hand, that's not invested into something that could possibly go down. It could go as high as 2 years, 3 years, especially if you know that your business is just kind of cyclical, meaning that there will be months or there will be times that it may not be as good, but there will be times also that it will be massively good. So you prepare for those times where you won't have a lot of sales, you won't have a lot of income. I saw it in the question that factor in the loan. Of course, you factor in the loan already. You have to make a budget. That part of that budget, as you weave in through your income, for those who are watching this, a budget is basically you writing down everything that's coming in and everything that's coming out. And since an amortization is something that you have to pay for on a monthly basis, then you have to write that down also, that should I don't have any income for a year or 18 months, worst comes to worst, the business does not do so well, you will still have the ability to pay off your amortization. One benchmark that you guys can do is this: check out your worst months, maybe during the pandemic, maybe during the height of the lockdown. Check out what's the lowest that you got, what's the lowest that you've earned, what's the biggest stretch of losses or lack of sales that you had, and try to see, okay, this is the worst that I've ever gotten. Then maybe times that by 2 so that you have a good buffer. So meaning, you've seen it that, okay, the worst that's ever happened to me, it took 8 months before my income went back, before sales started to go back. So if you want to have a good buffer, then multiply that by 2, 16 months. Of course, the trade-off there is this: every time you have money that's just in cash, it doesn't grow, it loses value because there's massive printing. And that's why Bitcoin is so amazing, because Bitcoin is outside the monetary system, that you can't make more Bitcoin, you can't print more Bitcoin if your money is just in cash. Somehow, no, just by virtue of the massive amounts of printing that's going on, whatever's sitting on your bank account will just keep losing and losing and losing and losing and losing value. I highly suggest this, that I may be a person who would always tell people, invest, 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 build assets, stockpile, try to figure out a way on how you can build the right foundation when it comes to your investments. But before you go into the offense, before you keep on investing, stockpiling, or putting into NFTs, into crypto, into stocks, into something that is highly volatile, build your foundation first. Set a stockpile of cash that will protect you. Should there be no income that will come in, you're protected. And that varies per person, and that varies depending on what your business is. What's very important is you write it down, whatever you're spending, and then you have a buffer that will cover that should times get bad. And don't feel bad if, oh no, it's not actually earning, I'm losing out to inflation because of this. It's okay. The goal of cash, the goal of your liquid assets is, it's not there to make you rich, it's not there to work massively hard for you, it's not there to earn for you, but its goal is when you need it, it's actually there. Its goal is when you want to take out money, it's actually there. Its goal is when you want to use it for something, it's actually there. So people may say that fiat is bad, but fiat also has its uses, that if you want to use it as a form of transaction right here, right now, that's accepted by majority of the people, then you actually have that, then you can actually use it, something that you can use on a timely manner. Lastly, I just want to say this: money is a tool. Money is something that could give you peace of mind. Money is a buffer. If that amount of money that you placed in that's liquid, you feel that you're not yet comfortable with it, that you wanted a larger buffer, then by all means, just increase it. Then by all means, just keep on adding into it. Up until a point in time that you feel confident already that the money that's there is just sleeping. Up until a point in time when you already feel that, okay, this is enough already, that whatever happens, I'll be okay. When you reach that point, that's when you go on the offensive. That's when you stockpile on your investments. That's when you keep on adding. That's when you keep on stacking. That's when you keep on building. That's when you keep on putting already. And the mentality behind that is this, and that's what makes it amazing. You won't get scared. You won't get frightened. You won't get startled every time there will be a correction. Why? Because whatever happens to the market, whatever happens to your investments, regardless if it's stocks or crypto, it's not something that will cripple you, and you're not even in debt as well. That's what's nice about that. When you have something that you're investing because it's a surplus, when you have something that you're investing because it's above and beyond what you already have, then that's when you're winning, because you can go full throttle. You don't have to be scared of the volatility, because what you have in the market is something that you can afford to lose. And I'll never stop saying that only put in money that you can afford to lose. So there, I hope that this is something that was insightful, not just to the DM that was sent to me, but to all of you as well. And feel free, guys, to send in those questions via Instagram or Twitter or the comment section down below, and I'll try to make videos that will try to help you and educate you, because at the end of the day, that's why I'm not stopping making videos, because the ultimate goal of this channel is just to raise a new generation of people that will value saving and investing more. And that's why I keep on making videos that will educate and inform, because at the end of the day, I really believe that there's so much opportunity, that we are sitting in one of the greatest times to be alive, that this is one of the best times for us to grow. This is one of the best times for us to be able to get our feet wet, to run, and not waste the finest years of our lives. When you're young, use what you have to build assets. When you're young, use what you have to continually grow. Use what you have to be the best version of yourself. So keep on learning, keep on growing, keep on saving. Saving is underrated. Keep on saving for your future, but after that, invest. I want to invite you, if you want to know more about investing, I have this course which is happening this March. It will be live via Zoom. We're gonna talk about bonds. We're gonna talk about the REITs. We're gonna talk about the stock market. But above and beyond that, we're gonna talk about exciting topics like Bitcoin. We're gonna talk about other altcoins, and we're gonna talk about the NFT market as well. So if you want to know more about that, if you want to join us, check it out down below. It will be 6 sessions, all online, webinar format, live via Zoom, me speaking. And what's nice about that is, unlike this YouTube session, you guys get to send questions live to me during that session as well. So links are in the description below. It will be an investment 101 masterclass. But if you can't join that, we have books. And if you want to invest also in crypto, stocks, the metaverse, links are down below for you to be able to join us. So I guess that's it. This is Marvingermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.